Well, last year we brought you the very first panel discussion on the launch of the new BSE SME exchange. Well, the exchange finally launched last week with a new set of norms and regulations for startups. What are the implications? Well, here's a special report. Make my trip, SIFI, Rediff. What do they all have in common? Well, they all headed west and chose the NASDAQ for their stock listing. Will the trend continue? Well, the SME exchange that launched from the Bombay Stock Exchange last week believes that it has new norms which could possibly curb the NASDAQ migration.
3 years track record on profit making is not necessary. Whether it is a profit making company, not profit making company, doesn't matter. When a company which is a couple of months old also can come.
Apart from the profitability norms, there are a host of other norms startups should take note of within the exchange. Firstly, the complete issue size is underwritten by merchant bankers on the exchange. Secondly, market makers will have to ensure a two-way quote for 75% of the trading day. Thirdly, the minimum lot size for investing is 1 lakh rupees, which means that in many ways, startups and SMEs will be safeguarded from speculative trading. An interesting set of norms aim to both facilitate investing interest in startups and safeguard their interests. Startups like DSN or Digital Signage Networks have taken notice, and they believe that the exchange might work well for mid-stage technology companies that are unwilling to give up control during their second round of fundraising.
During Series B, typically companies go through this thought process in terms of whether they should give up control or not, because the first round, normally the investors already have 30 or 40% of the stake. And what happens in this situation is that the investors are a bit cagey of owning the majority of the company. The promoters are cagey of losing majority of the company. And the SME is actually providing an excellent solution for this problem, where a retail base is now going to enter the company. So without losing majority control and without a single investor owning too much of the company, they can still meet their capital requirements.
The other key factor startups will be looking at is costs, and they will need to wait for a few IPOs on the exchange to compare the cost structure. The first company to list on the exchange is BCB Finance. Apart from this, 3 other companies have filed their DRHPs on the exchange from a variety of different sectors. But both Dalal Street and the startup community are bullish and optimistic on the SME exchange serving their needs. There is, however, one critical element missing. Yes, the merchant banker or the intermediary who will bring these pieces together. What's his view? Let's find out. Come, follow me. One merchant banking firm that's been tracking the exchange closely is Microsec, based out of South Mumbai. They, along with industry experts, believe that the exchange must incorporate certain changes in order to become more merchant banker friendly.
The number one, there is no exit to the merchant banker. If you see the guidelines, there is an exit to the market maker in terms of he can give the 1 month prior notice and exit the market making. But the same way, there is no option to exit to the merchant banker. Second point, there is unlimited risk to the market maker.
Since the cost or the fee to the merchant banker is not very attractive, the underwriting norms being very tough, and you don't have scale, I think that these are the 3 reasons why there is a deterrent from, or there is a reluctance on the part of the merchant bankers to go after and support this SME exchange.
Getting more merchant bankers on board is clearly key, and the exchange has expressed an inclination to make amendments to its merchant banking norms over the next 12 months.
This is not a sprint. This is not a 2020 game. It's actually a timeless test. Right? I mean, you've got to play for a really, really long term, and only then we can actually sort of evaluate the success of this particular platform. If you look at the NASDAQ, it was set up in early 70s, and I mean, really caught traction only by the late 80s, early 90s.
It's a bold step in the right direction by the government. The next step they'll be hoping for, adoption and utilization of the exchange by both startups and investors alike.